A $30 billion lifeline for First Republic Bank in the United States brought down market fears about an imminent banking collapse, but a late tumble in the troubled U.S. lender shares showed investors were still worried about cracks in the sector. Large U.S. banks injected the funds into the San Francisco-based bank on Thursday, swooping in to rescue the lender caught up in a widening crisis triggered by the collapse of two other mid-sized U.S. lenders over the past week. For more of these headlines, we cross over to London. We're joined by Arise business analyst Bode Oshosumi. Good morning, Bode. Thanks for joining us. So what is the latest in the banking sector as far as regulators and the bigger banks move to avert more crises?
Good morning, and thanks for having me on the show. Well, it's one thing to get a 54 billion lifeline, as was offered to Credit Suisse, which calmed to some extent the markets, but another to win back your ultra-wealthy clients, many out of Asia that are already deciding to jump ship. Net outflows continue to go up after hitting $119 billion in the first quarter. And remember, Credit Suisse, however, is not SVB. It has decent liquidity ratios and a fairly robust balance sheet. But the implications of all these talk of weak accounting and reporting standards remain unclear, and that clearly is a red flag, only worsened by pre-existing jitters. Credit Suisse still shared about 5% today as traders digest the emergency liquidity. Swallowing up SVB UK by HSBC may have swept some dirt under a wealthy carpet. Doing the same with the UBS Credit Suisse merger may not be as easy, and the fact that a forced merger is even contemplated is a negative signal, and it's, I guess, perhaps better for UBS to let CS Credit Suisse collapse. Talking of the US, however, we understand that the banks borrowed a combined $165 billion from two Fed Reserve backstop facilities just this week. Again, a sign that the fragility and strains associated with this unusual deposit migration after the failures are somewhat still there. But many banks are still sitting on enormous unrealized losses as the value of their bond holdings declined, as the Fed has raised the interest rates over the past year. But the funding program, the BTFP, that's the Bank Term Funding Program, that's allowing banks to effectively tap some of their securities for cash without selling them, helps, although some would say it just pushes the evil day ahead. But the biggest banks offering deposits of $30 billion with First Republic Bank is another effort. But I'm looking at First Republic Bank, its shares are still struggling somewhat. Initially, yesterday was better, but towards the end of the day, they began to struggle. By the time we got to the after hours, it was down about 18%. Now, if you look at this bank, FRC, as we speak, is down 3.71 in pre-market. So not out of the woods, even though the big banks say that they're doing this because they have confidence in the banking system and in the health of the banks, although these tier one banks like JP Morgan, they have plenty of capital and liquidity, so that they can, of course, make loans and absorb losses and shore up banks like First Republic very easily. But listening to some of the comments, Bill Ackman from Pershing Square Capital, for example, tweeted that the move by the big banks spreads the risk of contagion, and it gives us a false sense of confidence, adding that he's extremely concerned about the financial contagion and risk spiraling out of control. So I think this is just going to keep going on and on. Yes, we've seen some recoveries in both Credit Suisse and US regional banks shares, but it's not really where we want it to be yet. But let's hear what Powell is going to say, which is now more a meeting by meeting scenario as the times look even less unpredictable.
And what are we learning from the Eurozone inflation figures as far as what we expect? Will the ECB rate hike, affect what you just talked about now, Fed decision next week?
Well, like I said, the times look less predictable, not unpredictable. I meant less predictable. And we got the CPI from Eurozone, 5.3% just came in. 5.6%, just came in higher than 5.3% last month. Still high. I think the hike of the ECB suggests that based on what they see, there is no need to panic, and the outlook for market stability is not as bad as many may think, or maybe not as bad as in the US, and not enough to take their eyes off the inflation ball. Ordinarily, banks, as you know, with cheaper and better diversified source of funds, should benefit from higher rates. But this problem of unrealized losses and less attractive bond portfolios will hit the vulnerable regional banks, which can be covered temporarily, as we are seeing by all these regulatory and all the initiatives. But still, Powell may have his views. You know, the banks are in the silent period, so it's not, no news cannot be interpreted as good news. We just have to wait and see. If indeed, as I think it's going to be, as it may happen, FOMC members are likely to be seduced by their anxiety to stay the course into doing something similar to what they did in the Bank of England. That is to just do their 25 basis points. But again, if they don't, it may signal a sense that the problems are less idiosyncratic and the wider contingent fears are not unfounded. So, as you know, Powell will always echo, or has always echoing Yellen's assurances that the banking system is healthy, and that may mean no need for material changes to the dot plot.
Baidu artificial intelligence release, we got mixed reactions. What are your thoughts on the AI space? I mean, is this the big game changer that it is? Because these launches don't seem to be going very well.
Well, now, yesterday it didn't go so well, but I heard today that the shares went up more than 14%. Stakeholders seem to come to the conclusion that, yes, they are doing their best with AI, even though we know that there are issues here and there. But Microsoft is really moving quite aggressively. They announced testing of infused AI into their Microsoft 365. As you know what that means, Word, Excel, PowerPoint, Outlook are all going to have AI pretty soon. And I hear the vision is for a more personalized AI, which will adapt to users, whatever that means. We'll see. But I still think there are risks here, significant issues on accuracy. You just try it out. Embedded bias, legal liabilities for misuse and errors, higher risks of plagiarism, and even cutting corners at exams. All these are raising the eyebrow of regulators who do not, as of course we expect, trust that enough is in place to avert abuses. My conclusion is that AI acceptance may be much slower than expected, and the regulatory obstacles are vastly underestimated. But you can't stop the likes of Microsoft, Google, and Baidu when they're spending so much money into this innovation engine that could easily make this the game changer that it's being promised to be.
All right, lots to look forward to. Arise business analyst Bode Oshosumi. Bode, thanks for taking us through the headlines. Appreciate your analysis as always.